Good morning, my predicted trades family. Hope everybody is doing well and had a great weekend. We'll start with a little bit of review. We had a pretty epic week last week, Monday, Tuesday. Just a slow fade back to the daily 50, and then we popped off of that and rallied into FOMC, which gave us some extra gas to go higher. After FOMC, you can see we opened, rejected Wednesday high, dipped right down to kind of the, I believe it was Monday or Friday high. Yeah, kind of that Friday high. So on Thursday, open, reject Wednesday high, fall to Friday high to find support. Then big old epic run back up. And we took out every key level that was a target above. On Friday, we slipped back to hold a key level at 40.87 in the bottom of the squeeze. Then it was a fight up to the daily 100 at 41.20. A little pullback again to 4100. And then taking out 41.20 and grinding higher into our main target zone around that 41.36. And we can see that overnight and pre-market here, we've already run into the bottom of that zone twice for a little bit of rejection. Looks like we even peaked a little bit higher into it, but we've got our 30-minute squeeze right at that zone and key level at the top, and at the bottom, right back at our last key levels, making a zone close to 4100, right? Before we get going into what the day can hold, let's take a look at the economic calendar. We've got a little bit coming out today, nothing too crazy. Looks like we've got some jobs data tomorrow, and some homeowner and rental, blah, blah, blah. And then we've got some PMI. Looks like it's not till Thursday, Friday that we have an 8:30 economic release. If you notice, each of these are Monday, Tuesday, Wednesday. They're all after 8:30. They're all during the bell, or after the bell. So during the cash session, we'll see if they hold much weight. And then, jobless claims and non-farm payroll, NFP, coming Thursday and then Friday. And then it looks like the following Wednesday we'll get that CPI. Yep. So that's what we've got on the economic calendar. Let's take a quick look at what we have for earnings this week. So let's see, we've got Pinterest today after the bell. Activision and Blizzard. Tomorrow we've got some Caterpillar and some energy, BP and Marathon. And then a little bit of travel with JetBlue, Uber, Marriott, yada yada. Ooh, Ferrari. Tuesday after the bell, AMD, PayPal, kind of the big ones, Airbnb, SPX, yada yada. Moderna's on Wednesday before the bell. We got through most of our big tech names last week. AMD, maybe PayPal. Kind of the only real, tech names this week, at least what we watch. But definitely interesting, Moderna's going to be interesting on Wednesday. Looks like we got some more energy in oil after the bell on Wednesday. Oh, you know, some Datadog, Lilly, and then AMC on Thursday. Yeah, so not a crazy week of earnings. And you can always find this in our earnings channel, in our server. These things get dropped in, so you can plan out and see what is on the calendar. I'd say the only one that's really of interest to me is AMD. Depending on how that goes, you could play AMD, play other chips as sympathy. And yeah, well, we don't want to forget Crocs. Crocs are very important too, right, Richie? And you know, Pinterest the day after the bell could be interesting and impact, you know, ad-based things. So, now let's dig into where we are and where we can go, what this week can hold. We are basically straddling and chopping around the second Keltner and the daily 100. They're pretty much right on top of each other, right at 41.20. So making a little zone of support apparently for right now because we're bouncing at it. Let's see if they can continue to hold at 41.20. If that gives out, it's probably going right down to this zone and this squeeze bottom. And if we start to slip those levels, you can see that the next squeeze bottom is down at that 40.87, the last key level, right? We do have a 30-minute, 1 hour, 2 hour. So this is probably 30-minute, and then 1 hour, and then a 2 hour. 2 hour and 1 hour tops overlapped at that key zone. If we can break out to the upside and get above the zone, you can see that I've got a couple of levels at 41.65, and then I've got the 41.83, 41.90 making a zone here. There's also the third Keltner, psych number 4200 and 4205. So these would be my upside targets if we can get above this zone and hold it as support to try to truck higher. But as we know, getting near third Keltner is starting to get a little overbought. So we might need a little bit of a reversion, right? Even if we just got back to that first Keltner, the daily 8 is overlapping that at 40.40. They'll likely start moving together. Meaning if we go higher today or stay up here, these will likely step up ever so slightly each day, getting closer to these other key levels. You know, I'm not saying that our nice little rally that we've had is coming to an end. You know, we had some nice pop-up consolidation. We pushed higher off of moving averages up to the next moving averages. You know, we'll know what the signs are when we start to break down. Definitely worth throwing some trend lines on, like we try to teach, so that we can recognize when we're getting a change in trend, right? Just looking at those lows from Tuesday and into Thursday and drawing that trend line, it now overlaps right there at that key 40.87 and that 2 hour squeeze bottom. So just a little slip to that key level will test that trend and let us know if we can continue higher. If we give it out, we'll get at least the reversion to the daily 8, and then the daily 21 is back down at our last key levels that we pushed off of Wednesday and through the rest of the week. We also have that psychological 40,000, 4,000. So if we slip the daily 8, we do have that, you know, kind of halfway between the daily 8 and the daily 21. You could even maybe mark that low from Thursday and project it over. So let's see if our Levels and trend line and squeeze bottoms can continue to hold the price action up, send it through Friday's high, and attempt to get to the next levels up and that third Keltner. If buyers don't step in and we start to fade down to test squeeze bottoms and we start losing levels, definitely want to keep an eye out on each of these targets to the downside. And yeah, like Richie said, after such a push that pretty much, Wednesday through Thursday was kind of all gas and no brakes. Quick dips in the morning and then kept going. So yeah, we should expect some profit taking for the trend to hold up. We've got to watch to see that trend lines are held, lower time frame moving averages are held. We can see on a 4-hour that the 4-hour 21 still sits down at that 4071, which is going to be, a little below. A little below our 2-hour squeeze. If we do slip to test something like the 4-hour 21. We also have the 4-hour 8 right at our key levels here around 4101, where the 30-minute and 1-hour squeeze sit. So we could get a little dip to that 4-hour 8, catch a bounce, and continue. If we start to give that out, that zone, squeeze bottom, down to the next, cascade, see if trend line can hold, push us higher. Anything possible, but we are definitely getting close. We're at that second Keltner. Third Keltner is usually the last stop before we have a good reversion to the mean. So let's see if the momentum can carry us. And Q also with a 30-minute, 1-hour, 2-hour squeeze. Oh, excuse me. I yawned all morning, and then when I get on the mic, I start yawning. So, NQ, nicely above its daily 100, which now overlaps that key level, 12,890. So we got a nice little range here with that 890 up 890 up to 960. So we got a nice range with our 30-minute squeeze. Going to focus on that range until it breaks. As long as we can continue to hold the daily 100 and that 890, catch a bounce to get back up to these levels and through Friday's high. Come on. And next target's to the upside. I've got a zone obviously pretty far away, 400 points away. But since we are at that second Keltner, next stop would be that third Keltner and some key zones there. One thing to also take a look at, we did look at this a little bit last week, but I guess it's worth a revisit. Why do you have to start getting slow on me? There we go. So, just looking at the year, back in February and March, we based and set in a double bottom off key levels. Caught a bounce back then to the daily 100, right? And then coming down again, and then another sell-off with new lows of year. Last time we caught a nice bounce and rally, we came up to test that floor that we set in February and March. We failed getting to and through that floor and stayed below the daily 50. Further down we went. Now we're back above the daily 50, and the daily 100 has caught up to this base. Just point being, we are at the same spot where we rejected last time for another sell-off and new low of year. So we have to be cognizant that this is a very big key level. It was support, kept trying to bounce, and then when it finally gave out, it became resistance. So now we're here again. And you'll notice I have a gap in my key levels. That's by design. You know, these are the important ones. And if we can get going through what has been resistance and it turns into support again, we should get up to the next levels. But with our third Keltner sitting right at those levels, we'll probably, or you know, I could very easily foresee us, if we got to that third Keltner or these levels, having a pullback back below this support, well, back below this key level, which we're trying to turn into support, and a little reset to some moving averages, still setting a higher low so that the uptrend can continue, right? So let's see how we deal with where we are now. What used to be support turned into resistance, caused more selling. Let's see if we can reclaim it and keep trudging. We might just have a pullback from here to the daily 8 or even 21, which is starting to catch up to that 460. Oh, so let's see if we have some profit taking and a quick reversion to the daily 8 to keep trucking. Let's see if we keep on trucking to that third Keltner and arriving at our next target, then coming back and consolidating while moving averages catch up to all these key levels. But you know, once we are getting too far from the mean, I'm always just trying to be cognizant of when are we going to have a quick reversion. And it could be now that we're above the daily 100 and we push a little more, maybe tap that third Keltner, then just come back and hold the daily 100. Kind of in a bull flag, right? So let's see what we get. And if we look at ES, it's the same kind of story. That 4136 level and zone was our support back in February and March. So there's that zone. It highlights right there. You can see we tagged it back here, double bottom, got all the way back to the 100, then came right back to it, bounced again, but then gave it out, then rejected it, stayed under it. So we're back at it. We have to see how this test goes. You know, even back here, we were at first Keltner and tapping it. Now we're at second Keltner and tapping it. It's stuff to be wary of. Oh, let's drop back on down. And we'll move right on to the Ruddy. Ruddy's next big key level is that 1900 that it's trying to fight to. Same deal, that 1900 was support, allowed it to bounce, but then when it gave out, it became resistance. So the Ruddy also above its daily 100. And just like the under indices, got a nice couple of squeezes that are stacked. It's like a 1 hour, 2 hour. So let's see if we can hold that daily 100, squeeze bottom, Friday's low, try to bounce up and get through Friday's high, through this second Keltner and that third Keltner, up at 1930. So let's see if we can get through Friday's high. Definitely going to try that 1900. If we can get through that third Keltner. If we start to give out the 100, daily 100 and the squeeze bottom, we got the next Keltner below, first Keltner and the daily 8 together. And should that start to give out, we've got the 21 down below and the 15 all right around 1800. YM. YM, also above its daily 100. So all indices made it on Friday. And overnight are trying to hold and move back up off of that daily 100. Let's see if during the cast session we take a little dip to it, maybe some squeezed bottoms, with the goal of getting back up through this second Keltner, this key level, which was Friday's high. And that next, a psych level of 33,000. And that third Keltner up at 33,350. So if we can hold the daily 100 and we want to keep pushing through this key zone and Friday's high, next target is that 3,000, 33,000, and then that third Keltner. If we start to lose the daily 100, the daily 8's down at that 32,300-ish. Daily Keltner and daily 8, should that give out back to that 31,800, which is what we came up off of. So let's see if we can hold up and keep on trucking. Apple. Ooh, Apple reported earnings, good reaction. It popped up past that third Keltner. Then when the day opened, that third Keltner steps up. It's basically like what we got to each drive on Friday. But Apple just in a flag after that earnings report and pop up to third Keltner. You can hopefully see this wedge coming into today. And we've got some stack squeezes on Apple. So play the range until it breaks. See if we can hold that 161 if we take a dip to Friday's low. Try to hold that 161 and squeeze bottoms. With the goal of bouncing up, getting through the earnings high. Getting back to that 165. And ultimately, the goal to get back to would be that 170 and 171, 172 key zone above. But since we are near that third Keltner, and we right after earnings, with a favorable reaction, we might see that we fire these squeezes down just to get a quick moving average slap, and to let the daily mean step up a little and Keltner step up a little to allow us to keep pushing. But definitely keep an eye on this wedge and the squeeze in tight range around 160, 161, 164, right? AMD, they report tomorrow after the bell. And you can look at some of the chips that have already reported. MU, Qualcomm, whatnot, to see how those reactions went. What was it, Intel, that was Thursday after the bell? They probably didn't have, or I seem to remember they didn't have the best reaction. But AMD with a nice gap up. So relative strength, closed underneath that daily 100. Now it's pushed over it and having a pretty decent gap up back to our 96 level. The next level I have is at 98, 99 and a quarter. And that third Keltner is going to be coming in right in between those as well. And that psychological 100, right? She's definitely continuing to push, running into earnings. Let's see how earnings go. If we start to reject any of these and start to lose that 96, I'll be watching for a dip back to this 93, 94. Some highs from Friday, key levels. Yeah. Amazon. Oh, darn it. There we go. Well, Amazon, amazing push off of the earnings. Jumped up almost 15 points. Excuse me. On Friday did make some nice moves, but basically doing that flagging right after an earnings pop reaction. So let's see if we break up out of this flag to get back through that third Keltner and that earnings high. And attempt to get back to like a 140, 145, 150, right? But we are up near that third Keltner. Keep an eye on this wedge. If it starts to break back down, we've got, we've got a gap that we, with some some levels to cover, right? So it is definitely worth trying to mark this gap. And I like to go with that low right after a earnings gap up. You could go connect it to open, but I like to use that low just to say we slipped back only this much. That should be an important level. That gave us the bounce. So Amazon with this little gap zone. Let's see if it stays on top of it and pushes off of it. But if we start to give out that low after earnings gap up, we could go back to fill the gap and get a daily 8 tap before heading higher. And, also keep an eye on that daily 100. Since we just blasted through it, we might need to go back and give it a test. So could just get to that and catch a bounce. Oh, my charts are loading slow. Come on. I swear, it's when I open OBS and start broadcasting, it's just the bandwidth. So, BA. Pretty nice gap up. Not sure if some news came out or anything, but, they had earnings, good reaction, quick dip back, but holding that daily 100 and then pushing higher. And finally breaking out of this 4-hour squeeze potentially today on Boeing. So let's see. I'd watch these high wicks because we could take a quick dip to those around that 164 and then keep trucking. But definitely a nice gap up here. And I've got a, gotta go double check that, but yeah, basically like where can I go today? Might make a quick dip to some of these highs. 163, 164, hold up there, and then keep trucking. Could easily just hold 165 and keep going. We have that third Keltner up at about that 170. Definitely a good move there pre-market. If this dumps 164, 163 and goes back to erase this gap up, it could be like a little bit of the accelerant we need to start firing through the bottom of the squeezes on the indices. If something like BA gives out, Amazon gives out, a couple of names can start everything to roll over. Cat earnings, what was it, tomorrow? Before the bell? Yeah, tomorrow before the bell. Cat, what an epic move on Friday. I know Miss Lee destroyed this, playing this week's, the August 5th expiration on a number of strikes, but my goodness, what a move. Gaps up right to that high, takes off right to and through our key level, goes from first Keltner almost a third Keltner, almost tapping that 200. If there is a little dip or pullback in the market, some profit taking, looking for Cat to hold up this 193.8 and that daily 50, which has caught up to it pretty much. So that should be support now that we got through it and above it. If we do have a dip, looking for that to hold, with the overall target of getting over 200 to that third Keltner, and the daily 100, which is still above, at 205 on Cat. Google. Ooh, there's a quick load. Google, decent earnings, good reaction coming off that daily squeeze bottom. We can see that the daily squeeze top sits up above with that daily 100. So that's the overall target of where we're trying to get to. Let's see if we can hold up 115 now that we're back over it. You can see it was resistance a couple of times. Now that we're over it, let's see if 115 can hold us up and keep us trucking through Friday's high, and to move from this from this first Keltner up to the second Keltner and this daily squeeze top, daily 100. If we lose 115, likely going back to all these stacked moving averages back at 112. GS. Oh, GS finally got out of this 4-hour squeeze and above that 330. Had a decent day on Friday. Looking a little bit weak, like it might be coming back. But it is having a wide spread right now, so let's see if we can hold that pre-market low, that daily Keltner, which will be about at that 330. And a bit to get back through Friday's high at 335. Keep trucking to 340. We're almost to that third Keltner. Definitely something to watch. If we give out 330 and 328, then we're likely heading back to that daily 8, 322-ish area. I'm going to skip JPM. Meta's, been weak. Let's go on to Microsoft. On Microsoft, back above the daily 200. Had a decent day on Friday, and set a new high there at that 282. Looks like this daily squeeze is firing and disappearing. We do have a tiny sliver of a 30-minute and a 1-hour in place here. So basically, let's see if Friday's cash session low can hold around that 277.5. With a goal getting through Friday's high, that 282, firing these lower time frame squeezes up, and a bid to get to that third Keltner, 287, 290. If we start to give out Friday's low, likely coming back to test the daily 100 at 275, and should that give out, probably coming back to test the daily 8, just a hair under 270, 267. And with the daily 21 not too far below that. Netflix. Come on, toss. So Netflix, not as clean, not as strong relative strength. I mean, we got a good move on Wednesday. But, when we rejected Wednesday's high on Thursday, it just came back to it and rejected again, kind of staying under it. Did get a nice push on Friday, but again, came back and stayed under that Thursday high at around that 227, sorry. At the bottom of these squeezes and right near Friday's lows. So just a little, some relative weakness in Netflix. It's already up at a second Keltner. Had that good reaction on earnings. I'd watch this earnings wick because we are back below it. So as long as we keep rejecting and staying under 225, we could slip into these squeeze bottoms firing down, or at least slipping enough to tap that daily 8 before continuing. But, it's been stuck in a range now, right near that earnings high wick. All the squeezes have set in, so you play the squeeze clouds, play that range till it breaks. Video. NVIDIA, had a reversion to the mean last week, Monday, Tuesday. Tapped that daily 21, and it's just been trucking with the rest of the market. Still not quite to that second Keltner, so at least NVIDIA does have some room to move. And that third Keltner up above 192. With AMD's earnings this week, NVIDIA's are still a couple of weeks out. So, depending on how AMD's earnings go, we could see a sympathy play over here with NVIDIA having a similar reaction. So, we do have right around this 180 and a half. We've got some highs from Thursday and Friday. So looking like we are slipping a little bit pre-market. Let's see if 180 can hold. If not, likely coming to the bottom of this squeeze back at 175. If 180 can hold and get us to the top of this squeeze, goal's getting to that second Keltner, which will be around 185. And then third Keltner up at 192, 193. So yeah, we could easily, if that 180 gives out, have a quick dip to this 2-hour squeeze bottom, and the daily 8 should be stepping up pretty much right there as well. QQQ. Just like we reviewed on the indices, getting back to their key zones that used to be support back in February and March. SPYs and Qs are the same. This little zone around 317 on QQQ is the same kind of zone. So to keep getting higher, have to hold this daily 100, push off of it to get through this zone, and keep trekking. We are at that second Keltner, with the third being up at 321 and a half. So that would be the upside target if we can get through this squeeze top, through this zone, and turn it into support to keep moving. If we keep rejecting, we could be coming back to test that 311, and should that give out, we'll come back to test the daily 8 and that first Keltner, which will both likely be stepping up around 307, 308. So play the squeeze in the range until it breaks. Lines up great with our levels. Skip all these. SPX. Oh my, the rain's coming down pretty hard all of a sudden. Oh yeah, it's like a monsoon out there. On SPX, we do have a gap fill back down where we took off from on Wednesday. On Thursday, we, took care of any gaps, and on Friday, we also have a teensy gap here that you could mark. Right at about that 40.80. So we do have those two gap fills below. Keep an eye on as targets if we are going to have some profit taking pullback, reversion to the mean type thing before we head higher. Let's see, we'll be gapping down a little bit here, close to 4,100. So let's see if we can get back above 41.18 and that daily 200, near 41.20. With the goal of getting through Friday's high and to keep trucking to that third Keltner and some key levels above around 41.80. But if we are just going to roll back over, definitely keep an eye on that second Keltner is going to be a little bit above 4,100. It actually might be where we're opening, near that second Keltner. And if we start to slip, we could go to fill this gap around 40.80 and come back to test 40.62. Should that 40.60 give out, likely coming back to this daily Keltner and daily 8 for a test around 4,000. SPY and then Tesla and VIX and we're done. On SPY, arrived back at our 410 zone. Slipping into squeeze bottoms and back below that zone. To keep moving higher, we need to get back above that 410 and push off of it in a bit to get back to this 414. 414 very key on SPY. If we can't get back above this 410 and it becomes resistance, likely coming down to test that squeeze bottom. Our second Keltner is probably stepping up right by this zone. So should those things give out, likely come into this 2-hour squeeze bottom for a test around 407 and some change, 408. And if that gives out, back to 400 to hit that daily 8 and daily Keltner. We can continue to the upside and get over this 414. The next key zone is around 418, where that third Keltner will likely be landing today. Tesla. Very strong name lately. Been on a wonderful little run, especially after good earnings report. So Tesla, had good earnings, good reaction, fought right up to 830, 840. Had a nice fade back to that daily 8 to hold that and push right back on through all of our key levels here and getting above that third Keltner today and above 900. 908 is very key. I know I don't have a mark at the moment. 918 and 930 are kind of the next levels to the upside that are key levels. Oh, let's see on Tesla. She starts to lose 900, probably coming back to fill the gap and retest this 890 that she got up to. Should that give out, back to 865. But if she can hold 890, or, hold above 900, first goal is at 918, 930. But nice relative strength. If it starts to give out, this trend up, we'll likely see the market taking a break too. So maybe worth drawing trend line from the lows of this drive up, because that could be like where the first pullback gets to, at least, is testing a trend line from those lows. Back at that 865 kind of. Yeah. But nice run on Tesla. I know a number of folks in here destroyed it from Wednesday on. I know folks were playing the 860s, 870s, 900s, 950s for this week. So nice run and a nice way to catch a large piece of this overall move in the room. VIX got below that 23 finally. But now we're coming right back to tap it. We did get to the bottom of that daily squeeze and almost to that second Keltner down on VIX. With the gap down on the market, we've got a little gap up on VIX. It's back above that 22.5. For us to continue to the upside and get through Friday's high on the market and everything, we need to see VIX reject 23 and go back below 22.5 to come back and fill this gap up on VIX. But if we're going to continue to see market taking a dip, profit taking, if we're going to see the market roll over, then VIX will likely hold above 22.5, get through 23, test that daily 8, and try to fight back to this 23.3. If we really start to roll over, then it's going to try to get to that 24 and that daily 15. But the daily 8, right at about 23, our key level at 23.3. That at least on Thursday, on Wednesday, it kind of allowed a bounce, but then got through. And then on Thursday, it's what we rejected to rally into, close on Friday. So if we want to see upside, we definitely need to see another rejection at this daily 8 or this 23.3 zone and get back below 22.5 to go fill the gap. But if market's going to revert to the mean, the VIX will do the same thing, revert back up to the mean. So that's it. Hopefully this was helpful for everybody. Looks like we're already slipping back to that 4-hour 8 on ES, trying to hold this zone, see if 4100 could keep us up. If we take a quick dip to test trend line and 4087, looking for a bounce there, and to try to get back up. Starting to give that out, then reversion to the mean looks more and more likely. And, it's worth noting on Tesla and, most names, Monday and Tuesday of last week, we did get a little dip and reversion to some moving averages before that big old rally. So for rally to continue, sometimes we got to take a little dip and slap some key things. But just like we got a Monday, Tuesday that, we didn't revert to the mean in one day. It was a slow grind. Once we got there, we took off again. We could get something similar. Doesn't always have to be a straight drop. But let's see what we get if everything can keep trucking. Thanks for tuning in, folks. Hopefully this was helpful, and we'll see you in the chat.